Hi everyone, welcome back to the channel. Today's topic is borrow until you die. And this strategy, even though it sounds extreme, I'll break it down in this video of what I mean by borrow until you die. The first thing we need to look at is that there are $8.5 trillion untaxed gain that are been held by the ultra wealthy. According to this article right here by the American for Tax Fairness and the new Federal Reserve data on household income and wealth, American billionaire and centimillionaire, which means those that hold 100 million of wealth or more, collectively held at least $8.5 trillion of unrealized gain, capital gain in 2023, 2022. Uh, what the unrealized capital gains are is that they hold asset in either stock, real estate, crypto, or anything that is they haven't sold yet. They haven't sold and recorded those gains yet. So the government cannot tax. The government can only tax on income and realized gain only, which means when they sell those assets and they book the gain, then they can get taxed. But as long as they still hold those assets, they can't get taxed on it up until this point, at least. So they cannot get taxed on that wealth or the paper profit, right? And then the other thing you need to realize is there's the difference between a worker and an owner mentality mindset. So who can claim work-related tax deduction? As you can see in this article right here, work-related tax deduction, what can you write off? Uh, Here's a really nice speak of what you can. Now, if you're like a worker, which you earn a W-2, you can't really write off anything. You can't really write off your meal, home office, or anything like that. But if you're self-employed or if you're an owner, you can write off a lot of stuff: meal, home office, travel, marketing, office supplies. Only the self-employed can fully deduct work expenses uh, from their tax, right? So that's the other thing that you need to realize. So workers trade their time for income, which is subject to federal tax and state tax, whereas owner focus on asset appreciation like real estate, crypto, and they receive compensation in equity, like Elon Musk or Jeff Bezos. They don't worry too much on their salary compared to what their stock-based compensation are. So here's another article that you can reference from. So from Elon Musk to Mark Zuckerberg, why do the super rich or the rich CEO take the $1 salary? As you can see from the other article, if you have a W-2, if they collect a salary, let's say 400,000, they have to be taxed on that 400,000. But if they don't, like, if they just claim that they take $1 salary and then everything else pay in, like, the company stock, and because they haven't sold those stock yet, they can actually earn money from that stock. And what they do with those assets is they borrow against those assets, right? So that's the reason. So buy, invest in asset that appreciate over time, like real estate, stock, or business, and then borrow against it. So you can actually borrow against your real estate investment, real estate property, and instead of selling the asset to get cash, which trigger a tax, because once you sell it and then you report that gain, you'll be taxed. When the government will come knock on your door and say, oh, now you gain this much money, you have to pay tax on this. For example, if you you purchase a house, right, for like 300,000, and then over time it appreciate to 500,000, which means you gain 200,000. And if you sell that and subtract all the fees, you have to pay whatever you gain on that, well, above the 300,000 that you originally purchased. But instead of that, let's say you instead you're selling it, you go out and you borrow against the house again, which means you cash out refi. The definition of a cash out refi is a cash out refinance is a form of mortgage refinance where the initial mortgage is paid off and the new mortgage is established. The new mortgage loan is larger than the pre-existing loan, so that the home equity is converted into cash. So the same example, like if you have we purchase house at 300,000 and then the house appreciate to 500,000, which mean there's an equity of like 200,000 on it. Most of the time the lender will let you borrow up until 80% of it. Now 80% of 500,000 is what? 80% of 500,000 is 400,000, right? So if you borrow 400,000, you take 300,000, you pay off the old mortgage, and then you'll be left with 100,000. Now the good thing about the 100,000 is you don't pay tax on it at all. As you can see here, a cash out refinance. The objective is not to obtain more favorable term within the mortgage. Instead, the goal is to create a larger mortgage and receive the difference between the two loan in tax-free cash. See, tax-free cash. So you don't get taxed for borrowing against the house. So the 100,000, you keep the 100,000. Whereas if you sell the property and pay all the fees, you get, let's say, 150, but then you gain 150, you have to pay tax on that 150, and after that it's probably going to be the same amount that you pull out in this particular scenario. But one of them you have to pay a whole chunk of tax on it, where the other one you don't have to, and you still keep the asset. So that's the reason why it's, borrow is most of the time it make more sense for most people. Now the other example is my house, my primary house. Back then in 2016, I bought it for like 515, I think, right? And then over the years, I think a couple years, like 4 years ago, I did a cash out on it and refi because the rate was so low back then. So what I did is, my rate was around 3%. I refinanced to like around 3% again, and I pull out $100,000. Now that $100,000 I used to buy something else, where I don't have to pay any tax on it. And that's the first time I did a cash out refi on it. And then like last year, again, my primary resident, I realized that the house appreciated to like close to 1 million. And so I check I look at the bank statement, and I noticed I still owe like I think 500 on it. And if I can borrow, can borrow up until 250, because they let me cash out like 80%. So what I did is I did borrow 250 on it, but instead of refinance, like cash out refinance, like this particular example, because my previous mortgage rate is my current mortgage rate is only 3%. If I do a cash out, I have to change the term to like a bigger, like a 6% or something. So I didn't do that. What I did is I borrow a second loan on top of the first loan, where I keep the first loan the same and then only borrow the second loan on top of it. And I got like a $250,000 cash out, but it's not a refinance, it's a second mortgage. So the second mortgage, even though the interest rate is a bit higher, but it's only on the $250,000 on my house. So this particular example, like my primary residence, I borrow against it like 3 times already, and I don't expect myself to sell it anytime soon, because like I said, it's better for me to borrow and keep on borrowing against it. That way I don't have to pay tax on it ever. So hold the asset until you die or to death. That's what it means. This allow your hire or inherit the asset at a step up basis, meaning that the capital gain tax is effectively wiped out for the next generation. So in the future, let's say I leave the asset to my kids, like they're gonna do a step up basis, and then they can reset their kind of like their the value that is recorded as the purchase. So for example, let's say like in the future this is probably worth like 2 million, and then by that time, like I'm no longer here and I have to give it to my kids. They can use another loophole to do a step up basis. So their basis by then it's gonna be like 2 million. So if they sell it at that time, like 2 million, they don't have to pay tax on it because there's no gain. So that's the other thing, why you keep on borrowing. And then use debt as a tax tool. Loan proceed or not taxable income, because whenever you borrow, you don't it's not a taxable income, so you don't pay the IRS anything on it. And then you can actually deduct the interest from your tax return too. Like when you file your tax return, whatever amount you pay in interest, you can actually use it in there to deduct it, and then lower your taxable income. So if you have a W-2, you can use that on the in addition to the W-2 income, and instead of like making 100,000, if you pay like 20,000 in interest that year, your tax income will become only 800 instead of 80,000 instead of 100,000. and then it's compounding growth also. By borrowing instead of selling, your original investment stay in the market and continue to grow. Like my house right now, it's still growing. Like, I don't lose that house because I didn't sell it. I just borrow against it, and whenever I borrow against it, I take all the money and I don't have to pay tax on it, right? So the basic of the basis of this strategy is just you have to shift your mindset. Building wealth should be income based, making more money to spend. It should be equity based, which is accumulating asset to hold. So that's the reason why I keep on buying and buying and buying. And whenever people say, "Oh, the market is too high now, why don't you sell?" But why should I sell? If I need money, I'll borrow more against it. Because over the year I'll pay down the principal, and then my equity will grow. And then whenever I need the money, I'll just tap into that equity by borrowing against it. So avoid short-term move like day trading or a house flipping. I don't. I never tried those before. I know there's a time that those are very lucrative. Like in the last like 30, 40 years, like people flip and then they make like tens of thousands or hundreds of thousands per flip. But then again, every single time they flip, they pay tax on top of that, and I don't want that. I don't like to go through all that for to trigger the tax the tax event. So that's why I just buy and hold. The very first property I bought was back in 2009 with my family, and they still have it till now. And just imagine how much money it been generated from that one particular property back in 2009, right? So and then I mean the so if you can shift your mindset by just accumulating asset, and then you allowing that asset to stay there and grow over time, like in 10 years or so, you have a couple of those, then you can retire from them because they keep on generating money, and that's my main goal. So borrow until you die is what the mindset should be shifted to. uh, so whenever people say, oh, why you keep on like refinancing, like, why not? Like, I mean, a lot of people that I know, like their mindset is they don't want a mortgage over their head when they retire. But then if you put all your money to pay off that mortgage, you don't have a lot of reserve, or you don't have like emergency fund. What's the point? Then when something happened and you don't have money, you just have to go out to the market and borrow. But then by that time, it might be more expensive than if you have the money and you just use it at the you save up the reserve and then you use it instead. So anyway, that's it for today. Thank you for watching, and if you find this video helpful, please hit the like button and subscribe to my channel for more real estate tips. If you have any question or comment, please leave below, and then uh, if you have any question or need assistance on buying or selling home, feel free to reach out to me. For that, I'll see you next time. Okay, thank you. Bye bye.